the tried and true fundamental things. We have never stopped marketing. We have never stopped following up. We've just doubled down on training and on systems and on just becoming excellent in all these operational areas so that nothing falls through the cracks. That's it. There is no leaks in our boat at this point, right? Or very few relatively compared to where we've been in the past. And I think that's what gives us a leg up and an advantage. So if you are new to the business, fall in love with the fundamentals, live and breathe by that, do the boring stuff every day. And those are the things that are going to help you find success.
Alrighty, folks, if you've been watching my channel for any length of time, you know that the housing market is changing. We have seen demand crater. We have seen supply build. This means that it's going to get riskier and riskier and riskier to be a real estate investor, certainly a real estate flipper. And we have the guy on the Mount Rushmore. Jason Pritchard is one of the top 4 real estate investors on my personal Mount Rushmore, and he lost $57,000 in February. If this guy can lose money, you know the real estate market is changing. But we're going to talk about how he's dealing with it. What is he changing? How does he handle losing $57,000? Jason, what's going on, man?
Nothing much. I'm doing pretty good considering I lost 57 grand last month. So yeah,
I'm here.
I got a big smile on my face, dude. So it's it'll be interesting, man. I'm looking forward to the conversation.
Well, let's break that down. Let's go to the what happened. Was this buying wrong? Was this condition? Where does this? Is this one big deal that got you? Was it lots of little paper cuts? What happened with 57,000?
So I think it's important. I want to give some context to everybody that's on here, right? So my company has about right now anywhere between $90,000 to $100,000 worth of regular reoccurring overhead every single month. So that's the baseline to just cover our expenses, right? Yeah. That's it, right? And so I'm going to unpack that a little bit so everybody understands how that's distributed. So we spend $35,000 to $40,000 of that $100,000 is spent on marketing, right? So most of our deals are done directly to the seller, right? 70% of the opportunities and the projects that we buy, we're working directly with the homeowners. The other 30% come from relationships and referrals and things like that. So we have to keep that marketing spend up in order to keep leads coming into our business. I'd say another $30,000 comes from payroll to my team, right? So everybody that's on my team, we've got 14 team members now. And so, just paying everybody, keeping everybody, keeping everybody's salaries paid and up to date is all that. It's going to be about another 30,000. And then the rest is just miscellaneous expenses. That's my office. That's all of our systems. That's all the subscriptions that we have. And so with this business, I think the big point that I want everybody to take away from today's chat that you and I are having, right, is you're not always going to have these perfect months where everything lines up, right? And everything, you spend 100 grand and you make 200 grand or 300 grand every single month, right? We're not a business where we have consistent, regular, reoccurring revenue every month. And it can be something that can mess with your head a little bit as a business owner. Even for me, 11 years into it, dude, nobody likes to sit down and look and see, negative $57,000 on their monthly P&L at the end of the month, right? So unpack what happened. It wasn't that we took losses on any particular deals. A lot of it had to do with the timing of when those deals closed, right? And nice. So, we ended up having a couple of deals just fall out and just fall through with title issues. So just to create some context, I think we're going to do 120 projects this year. And last year's numbers, we had a 16% fallout rate, meaning if we put in, let's say 100, just for the sake of easy numbers, 100 contracts in 1 year, 16 of those are going to fall out for different reasons. Title issues, inspections come back bad, something happens and we just can't deal with it. So we did have a handful of deals that fell out of escrow, but that's natural. And that's going to be, things that just happen. And then we had other deals that just got postponed and their closings just got moved out to either March or April or whatever. Right. And so, on paper, it's a loss and you still see that loss and you realize that loss. Right. And, I think we're set up to have strong months in March, April, and May, where we're going to be able to not just offset what happened in February, but recoup some of that stuff. And so I think we'll be able to bounce back. But, I think the important thing for everybody to know is, when you get into this business and you become an entrepreneur, it's going to be a mental roller coaster. You know what I mean? And
Yeah.
you got to learn how to deal with those ups and downs.
Yeah, well, let's go back to a conversation I think we had in 2023. What I'm happy to hear from this conversation is it really was just a timing thing, right? You have this fixed overhead, that goes out every month regardless of the business, and then you rely on money coming in a lumpy fashion.
Yeah.
So
Yeah.
you really just had a timing issue. So this isn't a repeat. I think it was 2022 where the market changed on you, and you actually did take real losses on projects. So this is
Correct.
not a
Yeah.
repeat of that.
Yeah. Yeah. I mean, if you guys remember back, beginning of 2022, we still had, really record low interest rates, right? And then as the year progressed, I'd say midway through the year, I think it was April, May, that's when we started to see interest rates
Yeah.
shoot up. In our business, you're buying and you're trying to project out what the future value of those properties are going to be. And it was just really hard to shoot at a moving target right there. And we knew that the number was going to come down, but we didn't know how far or how fast that number was actually going to fall. So you're just trying to aim at this number. And so, when we went from, let's call it low 3s to 6s in the matter of months in regards to our interest rate, right?
Right.
If we buy something in April, May, and our average turnaround time is, let's call it 5 months for a flip, right? Like at that point, the price of mortgages has doubled, everything changed. And so we took some real losses on our books. And so we talked about this openly by end of 2022, beginning of 2023, I think January of 23, we realized $100,000 loss on our projects. Right. And so what did we do to change that? We moved our business model to one where we got, cash conversion cycles on flips in this business model are the longest, right? They take 4 to 6 months typically. And we said, how do we take that timeline and compress it and do things that are much shorter? So we leaned into our strength. We focused on doing more assignments. We focused on doing more wholetailing, where we're just buying the projects and sticking them back on the open market. And that really dug us out of that hole very quickly. And we've leaned into that model. And what it's done is that it's allowed us to increase our overall volume because we're more nimble and we're not having to carry as much debt. We're not having to manage as many projects. We still flip a lot of houses, but we're doing twice as much volume comparatively with those shorter term deals. And that makes months like this, what we had in February, a little bit of an easier pill to swallow for me.
Yeah. Well, I'd be curious what you're seeing in the Fresno market. Again, what we're seeing, at least at the macro level, is, the consumer, in this case, the buyers, are nervous. I mean, I would even say many of them are afraid about what's going on in the economy. And from where I sit, my experience says a scared consumer is not likely to do a big acquisition. And a big acquisition might be, for some, a couch, could be a new vehicle, but for lots of people, it's the house. So have you seen demand change in any material way?
So my consumer is kind of two different buckets. It's an investor buyer and a retail buyer, right? So think about that, right? When we're doing assignments and wholetails, those are typically not going to, somebody that's using a 30-year mortgage, right? And so what we have found is the investor buyer appetite is as strong as ever. And so for us, we're moving our deals. And again, thinking about what our strengths are in our business. Our strengths are finding great deals and our marketing, being able to generate leads, having a really good sales process, and being able to do that at volume, right? And so we've really probably moved, Zuber, to 60% of our projects that we're selling are going to that buyer pool, right? Because when we're doing high volume wholesale and wholetail, right, we're selling it to that buyer. The other, let's call it 40%, is going to a retail buyer, homeowner, owner occupant buyer, right? Here's what we found with ours, and we've talked about this ad nauseum, but it makes sense to reiterate. When you operate at or below the median, right, you buy fix and sell projects that are going to sell, and for us, at or below the median's around 375-ish, something like that in Fresno County. So when you're buying for 200 to 250 grand, you're putting 50 to 75 grand into that house, and you're turning around and selling them for somewhere around that price point anywhere in Central California. Usually going to insulate yourself from risk because there just continues to remain, there's more inventory coming online, but there's still a shortage of there's a shortage of remodeled inventory for sure. So there is more stuff becoming available. But if you really look at what's available, that's turnkey, that is like completely redone, right? That isn't, lived in, that we can move in, but doesn't really look and feel nice. We still have a pretty competitive product, right? And so we keep very close eye on what our competition is doing, and we try to buy at a number where we can resell a fully remodeled product at or around the price of maybe a lived-in house, right? And so if somebody's looking to buy in that neighborhood, we want to be the most competitively priced and the best looking product, and that helps us get through that inventory without keeping it for a long time. Now, that being said, right now, like with my team, we're just telling everybody this is going to take 30 days for us to even get an offer on most of the stuff that we have out there, which is normal going back to when I first started, 2014, 15, 16, 17. That was very normal.
Yeah.
It was list the house, you're on the market for 30, 45 days, then you're in escrow for 30-ish something days, and then you sell, right? And then we hit this period where, you stick it on the market over the weekend, you've got multiple offers, and it just trained everybody to this false expectation of what the real estate business is. And then it also created a lot of bad habits because people were condensing their time frame to sell. And when they do that, they were condensing the amount of holding costs that they would have, right? They're not trying to bake in for any contingencies like things falling out of escrow or longer periods of time on the market. And we've just learned our lesson, dude, the hard way in lots of ways. And so I think now, the stuff is taking a little bit longer to sell, but it's still selling. We're not holding the bag on anything. We haven't taken any losses on anything this year, like on projects this year or on the back half of last year. So it's been really good, man.
Yeah, and again, I think that's the magic of your business is you've pivoted, you've shrunk the cash conversion cycle, you've insulated yourself by staying below the median, not taking a gamble on the $700,000 stuff, which is stacking up left, right, and center. Well, let's talk about the supply side, because the other thing that I think is going to be interesting, and I said this on Ryan Pineda's podcast, investors, right, the folks that do the work like yourself, are going to crush it in 2025.
Yeah.
Because again, the demand's falling off, but supply is going to be building, which means you're going to get the pick of the litter. It also means you're going to get better price points, right? Yeah. I'm going to guess you're getting price points today that are lower than last year and might even be lower
100%.
than the year before. Exactly.
100%, dude. 100%. And it's kind of been a lagging indicator, like with just the sellers realizing party's over. Party's been over for a while. And a lot of times the sellers are the last ones to realize that. You know what I'm saying? And so, and I know you and I have talked about this. I've heard you preach it. It's like just exercising some patience here and realizing that a lot of the sellers that we spoke to last year that had just very high expectation of price, for somebody like us, we can just say, hey, look, we're not going to be a buyer for you at this number. It doesn't make sense. And here's why, right? If something changes, just let us know. We're going to touch back, and check in with you every month just to see how things are going. And when you have a business where you've got good follow-up protocols and procedures, you check in and you're really just kind of just there patient and waiting for the market to do its thing. A lot of those sellers have just come to the realization that, they're just not going to get the number that they wanted. And who have they been talking to? Jason's team has been checking in with them every month for a year. You know what I mean? How's everything going? Do you need it? You know what I'm saying? And so what's the likelihood that they're just going to go with some random person that, unless they just blow them out of the way, and great. And we always tell the sellers, like, if somebody comes and gives you, take that money and run. Because if I were you, I would take it. But, we're going to be here for you at this number if and when you're ever ready to do it. And more often than not, we're seeing, just with a little patience and time, them come
that's why you're not going to lose money on deals this year. You're patient.
Yep.
You're patient. And you understand the price points have reset. And again, there may be sellers out there. Are sellers out there. There's no maybe in that had wished pricing last year. They knew they can hold on. As time goes by, that thing becomes a big old giant elephant. At some point, they got to sell. They've got to convert that equity or whatever that is to cash because it's time to move on.
Yep.
And that, somebody who wasn't a motivated seller last year could absolutely become a motivated seller this year. And they're going to get less money because the market has changed. That old market is gone. So it's not shocking that you guys are crushing it because you're doing the work.
Yeah. Yeah. And I think we were talking about this just right now on the Deal Champs show that we were just doing right now. It's the operators. It's the people that are experienced operators. And if there's any advice that I can give to anybody that's there, it's just fall in love with the boring parts of your business,
Yes.
right? Fall in love with the boring aspects of your business, and the people that are like can just do the boring stuff longer than anybody else, those are the ones that are going to be successful. We do not do anything. There is nothing proprietary about what we're doing. There is no secret. This is just the tried and true fundamental things. We have never stopped marketing. We have never stopped following up. We've just doubled down on training and on systems and on just becoming excellent in all these operational areas so that nothing falls through the cracks. That's it. There is no leaks in our boat at this point, right? Or very few relatively compared to where we've been in the past. And I think that's what gives us a leg up and an advantage. So if you are new to the business, fall in love with the fundamentals, live and breathe by that, do the boring stuff every day. And those are the things that are going to help you find success.
That is such wise words. And again, it is the boring stuff. Like 2020, 2021, it was all the sexiness, the sizzle, the this, the that's, the others. That's not a normal market.
No,
I've been investing for 25 plus years now. And for probably 20 of those, at least, it's the boring stuff. It always takes longer. It always takes more things. Again, folks, I looked at my ridiculously small buy box every day for 3 freaking years. And I thoroughly enjoyed the process because I just knew eventually I'd find that gold bar or that diamond or whatever you want it to be. Most people give up after like 8 seconds.
That's right. That's it.
We're going to crush you.
Yep. I think that's it, man. I mean, that would be, if you can do that, you'll find success, and you just know and have a vision for the future, and just, you can wait it out and you can be patient. You'll find success in this business. We always say it's simple, not easy, real estate.
Yeah. Well, folks, Jason is putting on the best event in California for real estate investors. It is called Deal Champs. You can go to go.dealchamps.com. I will get it out eventually /summit-2025. The damn link's on the screen.
Right there on the screen. Click the link. That's it. Yeah.
Go get it. Jason, give us closing thoughts and wrap us up.
Yeah. If anybody's going to be in the Fresno area next Friday and Saturday, April 4th and 5th, we're going to have an amazing event, a crazy speaker lineup. Zuber is going to be there on day one. Myself and my wife, Jennifer, are going to be there speaking as well, talking about how to work as a husband and wife. Pace Morby, Dolph DeRoos, just, all the top names in the industry. So click on the link. And then if you ever need anything from me, jasonpritchard.com is a great place to go to connect with me, my team, get all the resources that my business uses every single day.
Awesome, buddy. Appreciate you. See you next week.